Welcome to Bears in Exile. Today is Friday, August the 17th, and this is the market overview for the weekend. And whatever I say after that. Alright. Starting off with the Dow. How about that? Well, ending up 25 points, thanks to a really strong push at the end of the day. And we have everything headed up. I believe even the MACD histogram, yes indeed, everything pointing up. It's a very impressive, and that's what it is. Coming close to the highs of the year, approaching ever so slowly. And just a little ways to go, and that'll be it. Which would be 13,338. So only about 50 points to go, just over. Very impressive. Now, what else do we see? We see we've made a new recent high. MACD histogram is ticking up, but it is low. So even more negative divergence, which at some point, someday, will matter, but today it does not. And looking at the 60-minute time frame, yesterday it was overcooked in the 60-minute time frame, and today working itself off, just going sideways with the pop at the end of the day. Nothing really to see here. Most everything trying to tick back up. We noted the 14-day RSI moving average still moving up in the 60-minute time frame yesterday, and it is closer to the top, but not quite there. And the MACD histogram also slanting down as the price goes up. So not a bad 60-minute chart, not a bad daily chart. They are definitely goosing the market, and we'll see how far it can go. And SPX, more of the same, getting even more extreme in the heat map for a topping area, but it can continue for a while as it has already done. Beyond that, just like the Dow, everything ticking up, even the MACD histogram, I do believe, ever so slightly. Yes, it does. Nothing to rehash in the 60-minute time frame, and we are even closer on SPX than the Dow to its high. Matter of fact, we're only about 4 points away, which is absolutely nothing. And then they can have their headlines of new highs for the year, blah blah blah, new bull market, and all that jazz. So fascinating. Moving on to the VIX. Yesterday we noted that the VIX had not made a lower low while the SPX was making a higher high. And today it decided to break down. Did make a lower low, new 5-year low on the VIX. Beyond that, everything ticking down, even the MACD histogram. And I mean, how do you make it look worse than this, right? I guess they'll find a way. They always do. 60-minute time frame. It was overcooked yesterday. Oh, I'm sorry. It was in a bottoming area still yesterday. Today becoming extreme at its big drop. Big nasty drop. And going sideways to try and work itself out. By the end of the day, a few things trying to tick up, but so it's not the worst 60-minute chart in the world, but wow. How do you not lose hope for the bearish perspective after looking something like this, right? I mean, the bulls have to see this and say, oh yeah, we're home free. And certainly, consolidation, could that be for another drop? Yeah, it could be. 14-day RSI moving average has all kinds of room to move to the downside. So, It could get worse before it gets better, and it's simply incredible. Moving on, TNA. Very, very nice. We're talking about how it had not broken out of its high. Yeah, we still have a ways to go. Last night made up a good chunk of the distance today, closing above the upper price consensus level. Everything moving up in the daily time frame. Getting a little dark in the heat map, but as you can see on the down SPX, it can get really dark for a while when it's an extended move. So not a bad looking daily chart. And the 60-minute, look at that. That is just incredible, isn't it? Look at that, just whoop. Wow. Beyond that, everything is getting pretty darn high in the 60-minute time frame. It looks worse than the Dow and SPX, moving down by the end of the day on the CCI, trying to roll over on the stochastics. 14-day RSI moving average still moving up, sideways on the CCI high, sloping down on the MACD histogram, and the MACD losing some momentum but still pointing up. So, for the bears, better 60-minute on TNA. But it definitely isn't something that looks like, oh, I'm going to flash crash right now or something like that. So, just to be clear. And UUP, the dollar. Very interesting. Because the dollar does not agree with the move today. Goes against the VIX, goes against the Dow, goes against SPX, goes against all of them. We moved up from yesterday's close, started going back into the long-term moving average bar, and retreated by, well, actually, I'll show that here in a minute. But it retreated, and we have everything ticking up except for the 14-day RSI moving average and the RSI going sideways. But other than that, even the MACD itself, an uptick. So in complete, absolute conflict with the move of the market today. Very interesting. Matter of fact, I'm going to show the 60-minute. You can see the big jump up at the open of the day. Markets really didn't care about that. Very unusual. But with every single drop, the market decided that it was going to continue on its merry way and trek up. Matter of fact, the 15-minute would be even better. Yeah, that looks about right compared to what the market did today. So, very interesting, able to ignore this entire move. And FXE, the euro. Not bad. Not bad at all. We've been talking about for a while now about the problems of dealing with the long-term moving average bar. And last night trying to get back inside of it. And today falling right back out of it. Getting down to the major price consensus level for this month and going back up, but still it is a ejection from the bar. It could have been stronger. Beyond that, most things trying to, actually it's pretty darn mixed in the daily. Down on the CCI, up on the 14-day RSI moving average, sideways on the stochastics, unusual, up on the RSI, up on the MACD, and down on the MACD histogram. Very mixed. And CompQ, the NASDAQ, aided to a great extent by Apple, which we'll see in a moment. Making a new recent high once again. And everything moving up. Everything. Very nice looking. Anything different in the 60-minute time frame? I don't think so, but might as well take a look anyway. And yes, extremely similar to TNA. Most things ticking up, but already pretty darn high on everything. MACD histogram sloping down. Not a bad looking 60-minute chart. It doesn't scream that now is the moment to fall. Going on to Apple. Look at that. New high. Way outside the upper Bollinger Band. And making a new high for the year. Wow. Very bullish. Beyond that, there isn't too much different. Almost everything is trying to go up. Disagreement in the stochastics. But other than that, very, very strong. And GE trying to get a better read on the Dow. And notice, it doesn't look like the Dow at all. It's not enough for a new downtick. Came really close, right on the edge. Wasn't able to do it. Beyond that, we have completed the bearish cross. Ticking down on the MACD histogram. Going up on the stochastics, the 14-day RSI moving average, and the RSI. Going sideways on the CCI. Not nearly as nice as the Dow or SPX. Do I trust the bearish cross? I'd like to, but if the Dow and SPX can get jimmied up some more next week, why couldn't this be a whipsaw? So I would like to see better development on that, but if it gets better development, that means that the Dow is probably going to take a hit too. So predictive value, not as good as we would like, or as I would like. And JP Morgan, the most important bank. Aha. Actually do have something nice here. I've been talking about all the troubles with the 200-day moving average, and once again, having problems with it. We don't have a big green bar, we don't have we have a pierce of the 200-day moving average, and more importantly, we have a downtick. It's not the greatest downtick in the world, it's fairly minor, but it does give us a target of, just call it 3670. It's not the greatest move to the downside, only 27 cents, but nonetheless, that move would take it below the 200-day moving average once again, and the chart would have further problems. So we'll see what happens. XLF, the financials, not as bad as JP Morgan making a new recent high. It is a doji, and we have everything ticking up, very, very different, but not the best candle where it's at. Nope, not at all. And GLD, why not? Still not a fan of precious metals at this point. GLD, yeah, getting higher, but not a pretty candle. It's not at the top of a range. Most everything ticking up. Actually, everything ticking up. So I guess the question will be, can it take out? Oh, there's just so much to take out above it that. Oh, well, I don't know what to tell you on gold. It just seems like a lot to overcome. And SLV, this one looks better. Not too much on top of it for a while, and but not everything ticking up. 14-day RSI moving average going sideways, RSI down, MACD histogram down. And getting right to the resistance point at the midway of the candle, actually piercing it just a little bit, but still, yeah, it's just not as good as gold. Oh, and oil, how can I forget? When oil is bullish, the market is bullish. Oil was definitely bullish today. Not the prettiest candle. It's hanging man, top of a range, closing in on the 200-day moving average. Everything is ticking up, so the daily doesn't look bad, but yeah, I'm not sure when this one's going to turn. No indication of a turn yet. And I think that that's just about going to do it. Yep. As always, all investing decisions are your own. This chart and video for entertainment, educational, and consumption of time purposes only. Thank you.